Hello, everyone, and welcome to Valley Homes on TV. I'm Debbie Giordano, your host for today's show. Be sure to catch us on channel 26, where you'll see us on Monday, Wednesday, and Friday at 6 a.m. and Saturday and Sunday at 9:30 also a.m. So we have roamed through the city of Milpitas and found a wonderful hotel to come to. We're at the Crown Plaza Hotel.
Yes.
Yes, and we have the general manager, Miss Winnie Kwok, who's here today, and we're also in this is the dining room area?
This is the restaurant, Seven's Bar and Grill.
Nice, nice. So thank you very much for letting us see your beautifully remodeled hotel and put that out for the viewers. So.
Well, thank you for giving us this opportunity.
Yes, great. Let me start out. Tell me about your background, where you were born and raised, and how did you end up coming to Milpitas?
Well, I was born and raised in Hong Kong, and I actually went to University of Hawaii for my college degree, majoring in travel industry management. And after that, I came over to the Bay Area and found a job in the city of San Francisco. And that's where I started with the Intercontinental Hotels Group. I started as a front desk agent.
So you went from travel agency to the hotel industry in San Francisco.
Actually, not a travel agency. The travel industry management is a college for all kind of travel.
Okay.
So it includes travel agency, hotel management, restaurant management.
Nice.
So that's what I major in.
So you started at the grassroots level, right behind the counter.
Yes.
Then you must, that would be the greatest learning experience to really figure out how a hotel runs, huh?
Definitely is a great experience.
So tell me then, how did your career grow from there?
Well, I then became a sales coordinator, and then from there I became the guest service manager, and became a revenue manager, and then
terrific.
We have 4 hotels in the city at that point in time.
With the Crown Plaza, or with a different hotel chain?
It's the same hotel chain. We have the Holiday Inns, the Crown Plaza, the Holiday Inn Express, and at that point in time we have 4 hotels, and then we decided to cluster into a cluster office. I was the director of revenue, and then I became the director of sales for the cluster hotels.
Wow.
And then I went back to operations. And
so how long have you been here in the Milpitas facility?
12 years.
Oh, nice.
Yes.
Wonderful. Great. Okay, so tell me about the amenities. If we were to talk about your hotel specifically, tell us what guest services, what amenities you have, and what attraction to the Milpitas residents per se.
Well, I think with all full service hotel, you have the guest rooms to accommodate overnight accommodation. Okay. You have the restaurant and the bar for food and beverage needs, and then the meeting space to host the meeting. To me, the most important thing are the people. I feel that the people of this hotel really make a difference. They always are very dedicated to the services of the clients, and they really create memorable memories for them and also engage with them. So that is the most important thing, and they make a difference.
And you know, Winnie, you're at a very unique location here within Silicon Valley. You're within a lot of businesses, companies. You're key to very 880, 237, a lot of commute traffic. So I think the location serves its purpose too for a lot of people to come in here.
Well, definitely the location, because all the high-tech company around here that, what attracts the business traveler to come to Milpitas, and then definitely the great mall, for the leisure travelers. And a lot of the weekend business is people who come to Milpitas to visit friends and family. Right. And also sports team.
Yes,
so
yes.
That's very important.
Absolutely. In fact, we talked offline before we started filming the show. I've visited your hotel, not since it's been remodeled. This is just fabulous and gorgeous, but been to your ballroom area where we've had Chamber of Commerce dinners and a lot of functions. And so I'm assuming you have weddings, and you're able to accommodate. How large does that capacity go for a crowd?
We can go for 350 people. And as far as weddings also, and then we're also very well known in the Filipino community for debut, and also like retreats.
I actually went to a Filipino anniversary party here, and oh my God, it was huge. It was huge. Well, listen, let's start about the remodeling. You and I have talked for a few months. We were going to filmed the show maybe 2 months ago, and you said, oh, we're still in the process of remodeling. So what kind of a facelift or transformation have you made to your facility here?
Actually, it's a total renovation. It's about $10 million we spent on the property.
Wow.
All of the guest rooms are being remodeled, from the soft goods, and then also the meeting space, the restaurant, the lobby area, the swimming pool area, and the fitness center. So the
terrific.
entire hotel has
It's
been
just like a
renovated.
brand new hotel.
Yes.
Then that's neat. And I understand you've been the major force in getting that done. What were some of the challenges you had in renovation?
I think it's coordinating everything together, timelines of deliveries, and that's why, I have been pushing back a couple of times with you for the interview. It's
Right.
just, it's hard to get everything on time. So that's usually the challenge
Well,
of
it
renovation.
looks like it was certainly worth the effort.
Oh, yes, definitely.
Have you had a grand opening, or
We haven't yet had the grand opening. It will be somewhere between either September or October. We're still trying to pick a date. that would
Okay,
work.
so we talk. What do you see, starting from the grassroots level up behind the counter? What kind of challenges and rewards do you have in your career as a hotel manager?
I think the challenge is when you need to find people. We have a lot of employees here that get promoted, or they have to go away from the city. And when you need to find people, is to find the people who is willing to work in the service industry, and finding the right people for the right role. That is challenging.
Something you do yourself, or you have personnel, a department that has
We
to
do
go?
have the human resources department who help us to recruit, but then that is I think the most challenging thing.
I would imagine so. And what are the other rewards that you've had? I imagine you've had some great rewards. I mean, there's some success. This is a huge success story here that you've achieved. What other rewards along the way have you?
Well, I think the rewards is when you receive an email or a comment or a letter from a guest saying that how they enjoy staying here, that they mention the team members who work here, their names, and they recognize, the effort. That is very rewarding for us. And then also for myself is very rewarding is when I see our team member grow in their career path and get promoted. So those are all the rewarding things.
Terrific, terrific. So now with your new facelift, your new hotel launch, what do you see in the future for growth or aspirations for the hotel? What's the crystal ball look like here?
I think the crystal ball looks really good. Seven's Bar and Grill, it's a totally complete renovation, and we have already seen a lot of local companies want to come over here for happy hours and special receptions, and then for the local communities, for the weddings, because they really enjoy and like the new decor of the ballroom. So a lot of more business will be coming our way, so we're very happy with that. And then, of course, for the future, we are always into giving back to the community.
Yes.
That is very important to us, our corporate responsibility. And actually, we just got an award from the City of Milpitas Recreation Service Department as the Community Champion Award.
Nice.
So that
well,
is
congratulations.
great.
That's terrific. That is terrific. Well, we're happy to have you here, and we're happy that you've stayed here. And we wish you lots of success and future rewards for the hotel. We know you're a major piece of Milpitas, and want to let the community know you're here. So what Elrin will do is he'll put on the, is there a contact email address, phone number? What would you like to give the folks?
Yes, we will definitely provide that information so that you can call on us when you have a wedding or you have plans for a reunion. We welcome you to give us a try.
Great. Well, Winnie, I want to thank you for being our guest on Valley Homes on TV. We give our guests it's a commemorative T-shirt with a logo on it. It says Valley Homes on TV.
Very nice.
I don't know if you're a golfer, but it's a collared shirt, so that works.
Thank you.
Wear that in pride, and thank you for your time. Show off this beautiful facility to the residents of Milpitas, and we wish you lots of success. Thank you for
Thank
being
you
our
so
guest
much.
today. Thank you.
Think you found every hazard out here today? Think again. The spot you missed could be a killer. That spot on your skin could be skin cancer. If you're a man over 50, you're in a group most likely to develop skin cancer, including melanoma, the kind that kills one person every hour. That's why your best shot is to check for a spot. It's easy. Follow through and check your skin. Go to spotskincancer.org to find out how. A message from the American Academy of Dermatology.
Through the years, trends and styles may come and go, but the important things remain the same. Generation after generation, consistently there, creating moments and memories to last a lifetime. Like a true friend, the national parks have always been there for you, and now you can be there for them. Support the National Park Foundation and help protect America's treasured places.
Welcome back, everyone, to Valley Homes on TV. Todd Flesner along with Debbie Giordano.
Hi, Todd.
Yeah, we're going to do a little wrap-up here, talk about some of the recent developments in the real estate market here locally, and also kind of what's happening in the world of finance
Oh
and
my
mortgages.
God, it's so exciting right now. What an exciting time to be in the industry and the business that you and I are in.
Never a dull moment.
Never a dull moment. Never a dull moment. I had an article in the San Jose Mercury, so I'm going to do a little Q&A
Okay.
with you. We're gonna test you, and I'm
Okay.
sure you're gonna have the answers to these. There's a
I didn't study.
Here's a picture of President Obama, and he's addressing a class in Desert Vista High School in Phoenix, Arizona, regarding home ownership for the middle class. I guess that's kind of the sweet spot right now, and how we're going to help, or how is the American dream going to be alive for the middle class.
Right.
So anyway, how, let me just go quickly. President Obama talked about government co-sponsored mortgage giants Fannie Mae and Freddie Mac are being phased out, as we know. So how is that going to affect interest rates?
Well, yeah, they talk about the phase out of Fannie and Freddie. Fannie and Freddie are what are known as GSEs, government-sponsored entities. And they kind of have lived in this in-between land of not really a government agency and not really a private agency. And the goal is to move more to a private sort of finance arrangement where the government's role and exposure with mortgages is not as significant as perhaps it has been. Now, the government still is going to have a role in continuing to help to support a stable economy, a stable finance market. In fact, Fannie and Freddie were developed after World War II really to help with that, to help make sure that financing was available, and was a big part of that growth spurt coming out of the post-war era, and the ability for many Americans then to have a piece of the American dream and own their own home. Okay. So
that was in the 1940s, you
correct,
said?
yeah,
Okay.
yeah. And so Fannie and Freddie have had an important role to play with helping to guarantee mortgages and ensure that investors in those mortgages felt secure that those mortgages that were being sold, that there wasn't a risk of default. We've been through the boom and the bust here with the subprime era, and and in that, looking at what some of the potential weaknesses are with that. So again, taking the taxpayers out of that, off the hook a bit for that, and moving that more to a private sort of risk pool.
Okay.
All
right. So interest rates.
Well, as a result, interest rates are probably going to go up a little bit.
Yep. Well, we've seen them go up a little bit.
Well, we have. We're here at the end of the summer. Over the course of the summer, we've gone up about 1% in the interest rate. And that's not necessarily related to this issue that we're talking about with here with Fannie and Freddie. That has more to do with the Federal Reserve Board and their policies, something called QE, quantitative easing. And we've talked about that on the show before, where the federal government, the Federal Reserve, is buying mortgage-backed securities. They've been pumping that money into the economy, keeping mortgage rates, I think, artificially low.
Okay, some loan programs we've talked about in the past, like FHA, Federal Housing Authority, which lends currently at lower rates to buyers with less than stellar credit. How do you think that might affect?
Well, Fannie and Freddie are not the FHA.
Okay.
They're separate agencies. FHA's mandate is to help promote home ownership.
Okay.
And one of the programs that FHA offers is a low down payment option, as little as 3.5% down payment. Now, with that, there's mortgage insurance and some other expenses, but it helps those who may not have been able to save the full 20% down payment to be able to get into housing. They also have some ability within FHA to work with folks who maybe have some bumps and bruises with their credit score. So we'll accept a little bit lower credit scores as well.
Okay. The last few years we've talked about homes that are, we called it underwater.
Yes.
Where they owe more than what the value of their home is. And the President Obama apparently is proposing loans for refinance that would not, that would change the current rules. So
right. Well, the
homeowners can refinance.
The Home Affordable Refinance Program, HARP program.
So that would not be affected by what's going on currently?
No, what we've seen with HARP here is there have been some changes in those guidelines. It used to be that if your home was underwater, if it was less than the value of the mortgage was less than the value of the property, even with the HARP program, you couldn't refinance. Well, some of those rules have been relaxed a little bit, and so you can go up to 200% of the value in some instances.
Wow.
Depends on, different lenders will have some overlays to that, and but there are, you can now get a HARP loan.
But Todd, you're probably seen where we've been doing this show for 3 or 4 years, and even up to last year, there were maybe a bit underwater.
Yes.
But I bet a lot of your clients now, with the increased in values have gone up, that you're seeing them come back in. They're able to refi pretty smoothly and seamlessly.
Right, I'm working with a number of folks where that's been the case, where their values here locally in the Bay Area have come back, and we're able now to, even though interest rates have gone up a little bit, they're still great. And
Good.
they're lower than what the rate that they may have on their existing mortgage. And I've got some great loan programs and options for that. But I'm also dealing with some folks now who are out in the Central Valley with their properties, and those properties still haven't quite come back yet. And so I'm working with them with the HARP program. In one of those instances, the folks used to live there in the Central Valley. They took a job down in Southern California but kept their home, and they're renting it out. So they've converted it to a rental property, but we're still able to use the HARP program because
Nice.
it qualifies under that program.
Nice.
So yeah, so some of those rules have been relaxed, and we're starting to be able to take advantage of
All
that.
right, just a last question, and then I'll get into some of the housing statistics. It says here that the Mortgage Bankers Association, so I'm going to ask you for your opinion, applauded Obama's plan to primarily rely on private capital while ensuring the availability of 30-year fixed-rate mortgages. What's your feeling about this new plan?
Well, I think it's going to take some time, number one, to come together. It's not going to be Fannie and Freddie stop tomorrow. It'll be replaced by perhaps another organization. We're already starting to see coming into the market more private funding.
Okay.
So what we call portfolio loans, and those are in the areas that maybe
These
the
are
Fannie-
private investors?
Portfolio loans from banks and other financial institutions that are making
Mutual funds, maybe?
perhaps that's where they're getting some of their money is from insurance companies and the like. But what they're doing is they've expanded some of the eligibility that the Fannie and Freddie programs have clamped down on. So by using those private funds, it's going to help to make financing a little bit more readily available to a broader spectrum of different types of people. So it won't be restricted strictly to those Fannie Freddie guidelines.
Okay.
And that's one of the things that folks have been struggling with here is some of those tight guidelines that we've had the last several years.
So where are we at today with interest rates?
We're in the fours still with interest rates. So and they're
That's
bouncing.
exciting.
They're bouncing around. Today was a volatile day. The Fed meeting minutes were released today, and that's always something that gets the
So you're on
attention.
the phone with your clients,
It
coaching
gets
them
the-
through that process?
Yeah, and it gets the attention of the financial markets, and so they bounce around a little bit.
Okay,
But,
okay.
But they're still great. They're not at the all-time lows, but
Right.
still historically great low
Great,
rates.
great.
Yes.
Well, should we talk about real estate
Let's
values?
talk about it, yes.
Well, of course, you sent this to me, San Jose Mercury News. Average silicone home tops $1 million.
I saw that
Now,
and thought of you.
Yeah. Now, of course, that's not here in Milpitas, but it's the average in Silicon Valley. I guess that's with the other, other areas combined. So that's neat. Let's talk about Milpitas and values right here in Milpitas. June 2012. We had a average home price of $527,000 and a median price of $480,000. That jumped to a year later, June of 2013, $724,000 for average price and a median price of $730,000. And I think what we had read, we were looking at about a 33% bump in prices. I think over years that
sounds about.
And I think if I do the math, I think that's just about there. Condos and townhomes, it continues to amaze me because Jeff had talked about all the new construction that's going on,
That's right.
in the Midtown specific area and around BART, and with all the additional multifamily condos that are being built, we still have a huge increase in pricing. In June 2012, we had $385,000 for an average price, and a median price was $408,000. It's now jumped to average price of $477,000 and $479,000 for a median price. So that's not quite 33%, but I think the
But it's still good,
single families,
strong.
good
condo.
strong market, strong sales. Milpitas continues to keep the pace up with Silicon Valley, and again with the new projects coming into Milpitas, BART, and all the exciting things that we've got going on here. I think we'll just continue to see the market go up and up and up.
Well, it's a great place to live, and
It is.
like I said, those other enhancements to our community just make it a little bit more attractive place to be. So, what do you see as our future trend here now? Have we plateaued, or do you think we're going to continue to see this sort of appreciation we had?
I get the
last year?
question asked, in doing the traffic flow with the open houses are down. So
Okay.
I think that we've kind of hit, the brakes are on now. It's seasonal. We're now in August and
Right.
going into September, so there's a little bit of a seasonal slowdown. The values go up when supply and demand. When
Right.
demand is up and supply is low, you see home prices go up. And we're now seeing a larger amount of supply coming in the market. So I think the prices might even off for a little bit.
Right.
Well, it'll be interesting to see where we go in the spring of next year.
Right.
So we'll watch that. We'll have folks make sure
Good.
they tune in.
It sounds like from the supply-demand sort of part of the equation for sellers, we're back to a little bit more of a traditional sort of market where when values were down, people weren't as anxious to sell in a down market.
Right. So they're coming back into the market. We're now being signaled off. I think we've
We could keep going,
we
but
can
we
keep
won't.
going. But I don't think we can. So until we see you folks again next month, this is the August wrap-up, and thank you for watching Valley Homes on TV.
Thank you.